All right, here's October 12th. This was a CPI day. So I'm just going to do a recap of what happened. And yes, you're looking at this as a hindsight, but this is the narrative you need to sort of like have in your head as you're trading throughout the day. One, you need to compartmentalize. You need to have your morning session and your afternoon session. And once again, I'm going to just say this once, but everything I say when it comes to time is all Central Time, since that's where I live. Instead of me saying anything on Eastern Time. So right here, um, the first thing you want to do is see what happened in the previous day. So here you had a double top, a failed breakdown, and then you had this spike the last 10 minutes of the day. So you can see that this was the previous day close. These two candles are actually, it closed right here. This is the last, or this is 10 minutes after the market closed. Not sure why my chart logs that, but either way, you can see that this was the close. This line is important. The ATR pivots automatically draw and do the calculations. Again, this is your previous day close, bull pivot, bear pivot, your fibs, mid ATR, another fib, and then the +1 ATR and or -1 ATR. Technically, this move right here today was an ATR move. It was a full ATR move. So ATR is average true range because you're measuring it from the previous day close all the way down to that level. So it's the same amount of points because it came from the bull pivot. So how this worked, first thing I want to do is draw my line at my 12 o'clocks. This is your morning session. This is your afternoon session. Pre-market, it shot up to the bull market. Actually, let's go ahead and take a look. So this is a regular trading hour. This is electronic trading hours. What it ended up doing is consolidating all night and could not get above the bull pivot. This spike right here was at 7:30. This was the CPI report. Volatility came down, hovered around here, then right here, 8:30, this is when the market opened. So market opened right here. These are 5-minute candles. I like playing with 5-minute because it gives me a better sense of the direction of whether the candles close. Which might be a lot of time because a lot can happen in a minute or two. So here you go. You have this fake breakout. You see this wick right here. It came back down. One would have thought because we broke back below here, we should have kept on going down. But a lot of times the market makers want to confuse you. So if you look right here and draw this line, you had this lower high. And higher lows. You have this consolidation pattern. When it broke out right here, this could have been your first play, and that would have been anywhere from 80 to 440 to or 380 to 440, which would have been 60 points. Again, for every point in NQ is $20, so that would have been a really nice payout at the very first. Well, I would say half hour. Half hour, there's a little chop. This right here is at the half hour. But right at 9 o'clock, that's when it broke out. And it only took about 10-15 minutes. Then it failed to break above. You could see that it was wicking above. At this point, after the half hour, I like to change to regular trading hour. So it gives me a little bit better gauge on what the market is doing. So here you go. It goes from pivot to pivot. And now the critical part, just because you see these candles closing somewhat over, the most critical part was drawing. If you look to your left, I have a 30-minute chart with a 4-hour overlay candles. This gives me a bigger picture. But if I draw this line, this right here is the multi-day pivots, the bear pivot, and this is the mid-range. If I draw that line, you will see that that is where this is it right now here. So on a longer term basis, this is having a hard time getting over that area. We've already extended pretty well. If you could see from the bull pivot, this consolidated, broke out. So with that said, it has to go somewhere. So as this is going on, a lot of times this is chopping people up. So when this breaks out, this should have been your move, pivot to pivot, okay? And then you see that it could not break above, came back down. You should have got in right here, and yes, you could have said you're targeting down here, but the momentum was to the upside. So I figured if it was not going to break out here right now at this time, then you're going to have sort of this double top effect. So that's what I ended up doing for about an hour. So yeah, these are 30-minute candles. So about an hour, it was just a lot of this chop, but still was good range. This is about 20, 30 points. So as long as you got in good entries and knew the direction, then this was good. But again, struggled again when this came back and broke back. You could have got short for a scalp, 20 points. But once you start seeing that it's actually having a hard time, you need to make a decision whether you're going to play the rest of the session or you're going to scalp. Scalp is anywhere from 20, 30 points, at least for me, that's what I consider a scalp. Some people scalp like, 3 or 4 or 5 points. But in this case, that can be sometimes challenging because you get a lot of whipsaw and you have to have the right entries. I like to look at bigger pictures, especially from pivot to pivot. So that's, you see that this is making a higher high. You knew this was sort of in this consolidation. Well, at some point, it's going to get to the apex. And if it's not going to break out and go to the mid-range pivot, then it has to go somewhere. Luckily, if you trade the system that sort of I preach with a lot of people, is the 12-12-30 candle is your afternoon. Reason why that's important is because it's a new candle on the 4 hours. Plus, so the 10:30 is when European market closes, so there's not as much momentum afterwards. So if it can't break out after 10:30, most likely it's going to stay within range, within a range. So right here you can see that we were really not breaking out after 10:30, and then when the 12 o'clock candle hit to the T, it ended up breaking this, and you could have got in short from the bull pivot, and your target would have been the previous day close. Once it hits that target, you can assess. You can get out and then get back in if it crosses back below, which this is what I did today. I got this 440 to almost 380. So again, that was about a, what is that, 60-point move. So that right there just was one contract. That's $1,200. Then you could do it again right here. This is what I also considered a box play. Box play is if you can't break above that bull pivot at morning session, you're more likely going to at least come down and target the bear pivot. So it's a box. You're boxed in within this range. Anything above this, you go mid-range ATR. Anything in between, you're in this box. Now here, this was a special occasion where you actually then broke. Once you broke here, then this is now resistance, and you want to target to the mid-range. And that's exactly what happened. Once it hit mid-range, you can confirm that this is a full ATR, and your best risk reward would have been to go long. And you can see right at the mid-range, it was to the T that it bounced off and then went another 100 points. Anything in between the bear pivot and mid-range, this is a 100-point move usually. And anything, this is also a 100-point move somewhat right here, but this is more of a average 100 points between these pivots and also pivots right here. You can also use the fibs as a guide. You could see from here it came down and then broke, came down here, and then it just sliced right through and came down here. Then same thing, came down here, that first 5 minutes, sliced above. You could have used this moving your stop. So this is how I use stops, as you can play in grids. And so then when it came here, consolidated, and then it just continued until it came right here. End of the day, I was either expecting a flush back down here, or a flush up to VWAP. It ended up doing neither. So that's usually what can happen. You have three options. It's either going to break out, it's either going to tank, or it's either going to consolidate. But at the end of the day, you have to pick a direction. If you get stopped out, stay away. The majority of the move has already happened. So that's sort of a synopsis of the day. It was pretty straightforward when it came to trading to pivots. Main thing is you just have to trust in them, and also look at multi-day. You see how this candle right here, see how the past 2 days that it was closing, these candles were closing right there. So what I would want to do is on this day, I would want to see that would be now support. And so this is a breakdown recover. So it's a failed breakdown reversal. And now it came back up here. That's why if I was going to target, this would have been my support for the end of the day if it ended up going down there. Or this would have been my resistance. But at the end of the day, you should have already been done with your day. There were 300 to 500 points to easily be made if you were in the right direction and you were reading the price action. Not to say this is easy. It's just you have to understand how the market flows and especially how to use these ATRs. And more you practice with them, the more and more you'll get better at knowing when to get in and when to get out. So, well, this was October 12th. It's a Thursday on a CPI. We'll see what Friday has a hold. I'm assuming what might end up happening is you have this drop right here, which is about 250 points down. And then you have what I considered, or what they consider a halfback. From here to here is about half the move. So if now it comes up, we should come back down. If it does, then what we would end up doing is we would come back down to the close of the previous day. So you can see that this is on the left. This is a weekly. It's Monday, Tuesday, Wednesday, Thursday, and this could be Friday where they end it sort of where they began. If they end up going the other way, then what we're going to do is the 260 or 270 area, we're going to play in this range right here. That is, and then we basically chop around and close the week probably either up here or somewhere in the middle. But that is how I would assess for tomorrow. Is this is going to be a key level, this 270 area, because you can see how the market really react. It was especially this candle right here that told me how important this level, because you can see how it closed. So that is how you use candlesticks and understanding what wicks, and that's buyer stepping in. But yeah, great session, and we will see you tomorrow.